my stability. You think I'll fall just like a guillotine, but I am here to stay, won't look away. The storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the. I'm coming for the throne. I'm coming for the throne. So you wanna be my enemy? You should've known I'd never kiss the rain. Ice runs in my veins, won't play it safe. I don't belong with your nobility. Who died and made you king of anything? You think that I'm insane? It's your mistake. Kingdoms rise and fall, I've come to take it all. I'll take it, I've come to take it. Kingdoms rise and fall, I've come to take it all. I'll take it all. The storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the. I'm coming for the throne. I'm coming for the throne.
Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same, cause that's what it takes. Form of art. I'm never gonna look back, cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same, 'cause that's what it takes.
Good afternoon, November 5th, Wednesday. It is the day that many of us have been waiting for, AMC to announce their Q3 earnings. Big day. A lot of important numbers going to be shared today. We had results in the past couple weeks from IMAX, Cinemark, and Marcus Corp. Some other big exhibitors. Regal, we don't get their numbers, obviously, because they're private. But I think based on the Cinemark and Marcus Corp results, I feel pretty confident we're going to come in close to the, I do the low, medium, high guess. And I published that video on October 2nd. I think we're going to come in close to the low estimate. We'll see. And the other thing that I'm not 100% certain on, but I'm going to just guess that the July debt restructuring could make a big difference in what is reported on the GAAP earnings versus the non-GAAP earnings. So, those debt restructuring one-time charges or pluses or minuses. So probably what we'll want to look at is the non-GAAP earnings, but what will be reported to the street when we look at something like stockanalysis.com will be the GAAP earnings. So yeah, it's going to be, it's a tough one to model is kind of where I'm at. I'm very curious to see. And let's put AMC up here, not Cinemark. We already did Cinemark this morning. What did it close up today? 7.5%. All right. Not too bad. AMC just kind of tracking flat. Just if this is your first time here, just a reminder, there is a vote coming up in December, one that we were expecting in the summer. And because of the weak Q1 at the beginning of this year that I was forecasting a year ago now, November of 2024, because of the weak Q1 and the upcoming vote that I thought would happen in the summer, I exited this trade completely in November of 2024. And kind of waiting to get the vote out of the way and see, how they were going to restructure the debt. I'll finally get my answer in about a month. And I will let you guys know if I re-enter the trade. I'm old. I don't have time to recover from a devastating dilution, so I'm trying to avoid them where I can. And we'll see what happens. We'll see what happens. Let's hit the old refresh. There is news from a couple days ago. AMC Entertainment elevates key leaders in legal, marketing, corporate communications, business development. A bunch of executives got promotions a couple days ago, including Ellen Kopachik. I think that's how you say her name, Kopachik. Baby UFO, sorry. Says, I don't see how they could avoid Chapter 11 if the vote is no. I put a link up above in the chat of a short story, not short as in the bad guys, but short as in brief. For those of you who are not familiar what happened in the most recent case I can think of, what happened when a company voted no when they were running low on shares and cash. MMAT was the most recent one that comes to mind. If you want a quick recap, here it is on Grok. And baby UFO, I think you would be correct. I mean, if they have a bad quarter, AMC, and they have no cash and no shares, what do you think will happen? Everybody's got a different judgment. Are they going to have a bad quarter or not in the future? I don't know. And also, what's the cash going to look like at the end of the day today? We'll find out in a few minutes. But man, you put them in a box and they got no options. What do you think is going to happen? People will say, well, Tony's trying to convince you to vote yes. I don't care how you vote. I don't own any shares. But I do want you to understand what happened in MMAT, and I want you to read the risk factors in the proxy, because they are telling you, AMC is telling you right now in the proxy what will happen if they don't have access to more shares. Do whatever you want with that information. I know the no voters, the Popcorn Project gang says, well, I don't care if they go bankrupt. Yeah, that's a choice. That's a choice you can make. And everybody should know who cares and who doesn't care. Rico says, thoughts on the three big sell candles of Hycroft. I wasn't looking at Hycroft today. Let's pull it up real quick. 738, down 3.5%. And really what I look at, who is that asking the question? Rico. I look at the gold and silver baskets. And I know, let's look at this right here. This is our gold junior mining basket. This is our silver junior mining basket, down 4.5%, down 5%. So Hycroft being down 4%, right in line with everybody else. I don't have any other analysis than that. Hycroft is one ticker in a basket, and if all of the rest are down 4 to 5%, and Hycroft is too, it's just the metals market doing what it gonna do. Why don't I own any shares? As I went over back in November 2024, I was forecasting imminent dilution event. If you were in my Discord or live streams back in November, I mentioned that and why that was the reason I was selling. That dilution event came about 4 weeks after my research flagged that it was imminent. And so I was glad that I had gotten out ahead of a dilution event that dropped the price. Remember when AMC fell from $5 down to, what did it fall to? $2.45 after that. I sold right here, $4.34. And then after that dilution event, we knew the company was out of shares and that there would be a vote requesting more shares. And so I said, I'm going to wait till that vote happens. And I was expecting the vote legit in the summer. And then it didn't happen. It didn't happen. It didn't happen. And then we got the July debt restructuring and news that the vote was going to be December. So they forced me to sit out much longer than I was anticipating, mainly because I don't want to be owning the shares ahead of a vote where shareholders could bankrupt the company by voting no. I don't want any part of that risk. I will sit out and let y'all figure it out. And if the all clear flag is waved, then I'll assess what the corporate actions are of a yes vote, i.e. more dilution, and I'll try and pick my ideal timing, assuming that I'm very positive on next year's box office, which I am. StockWiz says this is a short squeeze play. I would beg to differ. this is just my opinion. I know y'all have different opinions, some of you, and it's fine. But who was that? Mr. Stock Whiz. I'm going to make you mad, and not my intention to do so, but the short interest of AMC is 10%. Reported short interest. And I do not, on this channel, cover any ticker under 20% as a short squeeze candidate. You could have whatever theories you want. You could think a 5% ticker, a 10% ticker could short squeeze. You could even think that the float has been sold trillions of shares of hidden synthetic shorts. I'm not here to convince you to change your beliefs. I'm just telling you how I manage my analysis, my trades. I use the reported short interest. It was good enough for Roaring Kitty on GameStop back in the day. It's good enough for me. I understand you might not like that. That's okay. We can still be friends. I'm not going to try and convince you to change your mind. What I'm doing works for me. And I ask you to judge your success or failure based on what are you doing? Is it working for you or not? I had to change up my thinking. The announcement of earnings should be momentarily, and then the phone call, the earnings call, will be at the top of the hour, so about 40 minutes. StockWiz says, Tony, you can't deny the short interest is hidden and manipulated. The price is definitely manipulated, StockWiz, and there are definitely ways for institutions to be short a company without it being in the reported short interest. I feel like we go over this once a week. Yes, I could right now create a synthetic short on AMC by setting up an options trade. That is a synthetic position. I could go get a swap betting on the AMC is going to go down. That's a derivative bet. It's not directly impacting short interest. There are all sorts of ways institutions can bet against AMC. Absolutely. 100% legal. 100% will not show up in short interest. The more important question that I'm just going to suggest you guys think about is why? Why do they feel so safe in betting against this company? Until you can be honest with yourself on that, I think that focusing on manipulation is kind of for me, it's a waste of time. It never improved my trading, worrying about manipulation. Manipulation happens. You need to understand, why are they pushing the price down? Why is no other institution coming in? Because it's such a good deal. Where's the defense? There is no defense. And you need to understand why. This is a capital market, capitalism. When something gets undervalued, someone's going to come in and buy it. You got to ask yourself, I hope you don't believe that 100% of market participants are shorting AMC. There are willing institutions coming in to buy at some point. I want to be buying when they're buying. Hamrock says, you just missed Snap to talk AMC. Hamrock, there are a lot of people that need a sober voice covering AMC. I'm sure Snap will be fine on itself. I don't own any AMC. I'm covering it because of the amount of people that are getting what I consider to be misinformation that need a voice of sanity. And I hope you can appreciate that. I do not own any AMC, to be clear. Doesn't mean that I'm not going to cover the stock. There will be a point where I'm going to, if the shareholders don't vote for bankruptcy and the box office really is going to recover next year, at some point, I'm going to come in here and snatch this thing up at the bottom and then write it up. When I see that opportunity, I'll let you know. But I can't find that opportunity to make an outsized gain if I'm not paying attention. I own other movie theater stocks, so I'm already following the industry. It's just one more ticker for me to follow. All right, we got the results here. Let's see. Let's see what we got. I'm going to put them up on the big screen. Press release here. They make this so difficult. Total revenue is 1.3 billion. That is slightly higher than I was forecasting. Let me see if I have my spreadsheet up here. I had said what? On my low estimate, 1.19. On my medium, 1.2. So 1.3 is good. Net loss, 298 million. I had forecast 205 or 161. So that debt restructuring really killed us on GAAP earnings. Negative 298. Holy fuck. Now that's going to be, I anticipate, you know, not all cash loss. It's related to that debt restructuring. The net loss stems primarily from non-cash charges, associated with the refinancing. So that's what I was telling you guys. Like, I just put in a placeholder of 100 million right here. I have no way to estimate that, but it was a bigger hit than I was anticipating. $298 million loss. Not a cash loss. Adjusted net loss was 110 million. So when we take out those one-time non-cash charges, 110 million. Adjusted EBITDA, 122 million. Net cash used in operating activities, 14.9. That's not too bad. Free cash flow, negative 80 million. Cash and cash equivalents ended the quarter at 365 million. I was thinking, you know, if you've been in my Discord or on any of the live streams, that we would come in somewhere between 300 and 400 million. So that's right where I think I would anticipate that it would have been 365 million. Free cash flow, 80 million negative. So, I mean, if that were to keep up, if we just kind of think, if the company had no cash ability, no cash raisability, and no shares after a December vote, and they're burning 80 million a quarter on a bad quarter, that still gives them several quarters of life, but no ability to fix the balance sheet. So just something we'll think about over the coming weeks. Adam Aaron said 2025 turning out exactly as we predicted. A weak first quarter followed by a blazing hot second quarter followed by a softening third quarter. And we hope that it will end in a strong Q4. Third quarter softness should not be a cause for alarm or of some negative trend about which to worry. Well, we'll be the judge of that, Mr. Aaron. To the contrary, we expect fourth quarter box office to turn out to be the highest grossing fourth quarter in 6 years. Really? All right, now I got to see. I got to see this. The highest in what did he say? The highest in 6 years. That means 1, 2, 3, 4, 5. That means somewhere close to 2.9 billion. He's still, is he counting 2019 or not? 1, 2, 3, 4. He's probably not. I'm thinking he means it's going to beat all of these years. Yeah, somewhere I think between, it's so hard to guess, between 2.4 and 2.8 for Q4. I keep on updating my numbers every week, but everything's loaded to the end of the quarter. Let's see what else we got here. All-time record admissions, revenue per patron, $12.25. Food and beverage revenue per patron of $7.74. Who's not spending money on concessions? I mean, I swear every time we go to the movies, we're spending $50, $60. The average is $7.74. So y'all sneaking in your jujubes or what? I swear, man. $7.74. How's that even possible? Taylor Swift. Refinancing debt. Does he talk about the vote? Talking about upcoming movies. Adjusted diluted loss per share 21 cents. Diluted loss per share 58 cents. Negative. God damn it. Fucking sorry. Damn hovering over stuff on Adobe. New cash. All right. $244 million of new financing was primarily used to redeem debt. So the amount of cash they took out of that refinancing was small, is what I'm reading there. They got cash in July, but they used it to redeem debt. Not any comments in here really about the vote. I'm curious if anybody's going to ask about it on the call. All right, let's look and see how the stock is doing. It's actually holding up pretty well, up 4%. There you go. Wow, that's surprising. All right, let's see what y'all got in the comments here. Michael says AA has his hand tied to private lending. He has his hand tied by bad credit rating is how I look at it, Michael. The lenders have the upper hand in any negotiations as long as AMC is low on cash and has a bad credit rating. And the way to really fix that is improve the box office, improve free cash flow. When the company, if the company starts booking positive net income and positive free cash flow, and if the credit rating agencies can say the box office looks to be growing 10 and a half, 11 billion. If we ever get to that point, then AMC is likely to get a credit rating upgrade. Now, look at this thing go. And that improves their ability to negotiate better deals with lenders or get a larger lending pool, maybe some more competitive rates. Right now, they're kind of stuck in some crappy, distressed credit interest rates that they got to pay. And, you know, the lenders aren't beating down the door to hand AMC cheap money. NYC Parky says, what time do they announce? I think I have it. He seems awfully cranky. I put it in the video description title. 4 p.m. Central is when the call is. Also, you guys should always refer to company investor relations page to make sure you have these things on your calendar instead of yelling at me. Thank you very much. Baby UFO says, does the 80 million include the rate hike if a no vote? Which 80 million? Hey, what's up? Mike Sly says, remember last year they had 200 million free cash flow and a 2.3 billion. Yes, Mike Sly. I am predicting no matter what the box office ends up at for Q4, whether it's 2.4 billion, 2.6, 2.8, I'm predicting right now that we're going to have a massive, well, massive might be too. I'm predicting there will be a positive free cash flow for Q4. Because, same reason it happened last year. A lot of movies, a lot of revenue hitting at the very end of the quarter, and those bills, the money that the company has to pay to the studios and suppliers and stuff, won't hit until Q1. So the books in terms of free cash flow for Q4 will probably look phenomenal. But then, you know, like we said last year, in Q1, that piper is going to be paid. So we'll celebrate, but we're also going to keep our feet on the ground knowing that the bills still got to be paid in Q1. I just want to prep y'all for that now. Anya says concession set up a special cash register. I mean, I'm getting a food item, Anya, then my wife's getting a food item, then she's usually getting a candy, then she'll say, can I get a ice cream shake too? Can I get the Dippin' Dots? You know, she'll save up all day to go eat out at the movies, Anya. Save up her appetite. So yeah, it's very easy. And that, I'm talking 50, 60 bucks, not even counting any alcohol. We haven't really been drinking this year. And a Coke. Add a Coke onto all that food nonsense. Mr. Stewart says AMC not a good retirement plan. I think there'll be a point, Mr. Stewart, if you have impeccable timing, that and if the box office continues to improve, and if the company has the ability to continue to repairing the balance sheet, at some point there's going to be an ideal entry, and whoever gets that bottom dollar price and then rides it only on the upswing will have an outsized return to the market and other companies. But could I tell you that right now, today is that point? I cannot say that with high confidence because there's a lot of unknowns still ahead of us in the next 60 days. Interstellar, I hope your calls hit, buddy. I hope they hit. Do I have any thoughts on Bull? Yeah, I do, actually. I know if you guys watched our live stream a couple months ago, May, and Mediocre was very interested in investing in Bull, and we asked May to come on and give us her assessment of the financials because they were very confusing to me, and she did, and I still remain confused. But if you're in the Discord, you know that I finally bought some Bull a couple days ago. Did I put it on here? There we go. I bought Bull on 11/4 at 968. So we talked about it back a couple months ago, and I said too scary for me still. Mediocre is investing in it. I waited until yesterday. I told Mediocre, hey, I'm riding with you. So I'm in Weeble at 968. Don't follow my trades. I have no idea how to analyze this company. I'm just looking at the chart and I'm looking at Weeble and I'm thinking, you know, it's either going to crater from here because we're at all-time lows. It hadn't been this low since it started trading. It's either going to be horrible from here or it's going to get better. I'm either going to lose 20, 30% of my money and be forced out because I'm not going to hold it down to $4, or we go back up to 15, 16, 17 bucks. I don't know. Let's find out what happens when earnings comes out in a few weeks. But do I have a great story for you on Weeble? No, I'm using a little bit of luck, intuition, and guts here. We'll see what happens. I will have a better idea after the next earnings. Jakushman says, Tony and wifey trying to save AMC by themselves. Sometimes it feels that way. I see a lot of people complaining about AMC and not many of them going to movies. I don't even own the damn stock. I know I spend a lot more money going to AMC buying concession than these foos. In fact, we're already planning our Predator Badlands viewing probably tomorrow. Hang on one second. Scarlett's texting me that she's freezing, so let me go turn off the AC. I'll be right back. The weather's been nice here, and I've had the AC off for about a week. I mean, we're waking up to 40 or 50 degrees, but it was hot, and I didn't want to be sweating when I started this live stream, so I turned it on. But it is getting a little chilly in here now. Oh, man, that little bump up is starting to get smacked down a little bit. What else we got in the comments? L fell off the shelf. Blazing parabolic FOMO dip rip moon or zero. Let's go. I'd love to see your price, parabolic. What do I think about Unity software? That is a good question. I've looked at it a few times. I haven't been tempted to jump in. Not anything against Unity software. They're just the couple times I looked at it, I couldn't find a story that told me, Tony, you got to ride with all the FOMO that's going on in this play. What was the story back then that Roaring Kitty was buying Unity software? The stock has done good in the past year. There's nothing wrong with $15 to $46. They don't even have positive earnings. Like I don't know. How am I supposed to evaluate this company? $18 billion market cap. What do you think their earnings are? The earnings call in 20 minutes, guys, for AMC. We're just hanging out, chilling. If you want to see the results that the company posted, just scroll back in the video here, and we'll get to the call in just a minute. Revenue for Unity has been flat for about 8 quarters. Operating income never been positive. Net income never been positive. Every time I look at this, I mean, I get it. A lot of people are playing it. I just keep on saying, for me, I've already got enough risk trades in the fire. Why do I need one more money-losing company? I'm looking for some that are on the verge of a turnaround. What am I missing here? Analysts have a $33 price target. I don't know. It's over my head why people are buying this stock. I've been wrong about stuff before, though. Get Wrecked says, I'm deep in GME. Let's look at GME real quick. I bought some Monday in pre-market. I had a good till cancel order that I had set on Friday, and it got triggered in pre-market Monday, which is cool. That's why I set those GTCs. And that was at $21.95. And I have other lower GTCs set that did not get triggered. My cost basis is below the current price, so I'm in the green on this trade. And I call this a speculative ticker for reasons that we've gone over, and I'm not going to bore you. But I am excited about the cash that the company has, because that provides them perhaps some optionality in the next year or two to invest it in something cool. I'm not here to tell you GameStop's cash makes it worth $22 an hour. That's a fairy tale pushed on other channels. The book value, net cash, is about $11. That's the real position of the cash, but having $8.5 billion in cash, 8.7, gives them a lot of optionality, I call it, a lot of potential to do something. And I believe in Ryan Cohen, always have. I have years of videos going back saying I believe in Ryan Cohen. People tell you he hates Ryan Cohen, he hates GameStop. No, I have years of videos going back saying I believe in Ryan Cohen. It's a slow turnaround to take a beast like this and close all the stores and fix it. He's getting it to that point. So I'm kind of a believer in this $20 to $22 price range for a speculative bet. Speculation is built into this price. This is not a fair value price. This is a speculative price. And I'm all in. Not all in, but I'm okay putting some of my money on the line in that ballpark. I'm not going to be one of those guys that tells you if the market crashes, you're safe in GameStop. Think of all the cash they have. The market crashes, GameStop's going down just like everything else, guys. So you got to be smart. Manage your risk. There is no safety net in a market crash. What happened here with our price action? We had a little momentary bloop and then doop. We had a bloopy doop. Get Rex says, I believe in Ryan Cohen. Also, all right, cheers to Ryan Cohen. I know a lot of the bears, they get on to me. People, it's so funny because depending on what day or what comment people catch me on, they think I either hate GameStop or I'm pumping GameStop. I'm somewhere in the middle. I'm a realistic investor. I like value stocks. GameStop I call a speculative ticker, and you should manage your risk. I'm not one of those guys that says buy every day at any price and hold it no matter what. I swing trade the stock. But I'm not a bear. The bears do not believe Ryan Cohen is going to do anything intelligent with that money. I'm going to give him the benefit of the doubt. He's shown through Chewy that he can do okay. Until I see evidence otherwise, I'm going to give him the benefit of the doubt. I don't think he's raising cash for no reason. But you guys must have the emotional ability to be along for whatever ride, however long that takes. Could be a month, it could be a year, it could be 3 years before he finds something to do with that cash. So I'm not going to be hand-holding and babysitting people that are upset that it's taken a long time. You guys got to figure that shit out. That's why I tell you, only buy when it really makes sense. This buy every day at any price, rockets tomorrow nonsense, that's got to stop. If people pushing GameStop right now are as bad as the people that were pushing Bed Bath & Beyond in the day with the amount of nonsense that they spew out on YouTube on a daily basis. Bad analysis. I like good analysis. I like good common sense viewpoints on how a chart is likely to act, and good common sense financial valuation analysis, not fantasy valuation analysis. Fat Boy Slim, what's up? He says, can we have some shot word predictions? Well, I'm going to think about that, but I'm going to give you guys 2 minutes to think of something that he's likely to say, but not, not every couple seconds, because we don't want Dan falling out. And maybe Dan, I'll join you if we can get an appropriate word. I'm going to look at this press release real quick and see if I can find a good word. Robust. Robust. Do you like that one? Strengthen the balance sheet. That could be another one, Dan. strengthen the balance sheet and robust. Those are two ideas that I have. It's got to be those exact words, though. Strengthen the balance sheet. Not, I will not accept strengthened AMC's financial foundation. No. If he says that, it's only going to be one time. If we really want to fuck Dan up, we'd go with adjusted EBITDA. Yeah, different Dan. He's in the chat as Fat Boy Slim with the YOLO Ono photo. Taha says, what is going on with Duol, D-U-O-L? I don't know. What do we got? We got 13 minutes. I'm going to put up a poll. Dan, did you come up? Dan says revenue. Popcorn, you guys, man. COVID, bankrupt. He's not going to say bankrupt. He might be worried about bankrupt, but he's sure not going to say it. Word of the day. Shot word. Strength. I'm gonna throw one wild card in here for you, Dan, even though I don't think he'll say it very much. Taylor Swift. Welcome to the other Dan too, though. Interstellar Ape says AMC burned $94 million in operating cash during Q3. Yeah, let's look at the see what we got down here. Revenues, $715 million, 1.3. I had forecast oops, we don't need to look at this yet. Shh. Don't want to get ahead of ourselves. All right. I had forecast around 1.2. I think I said let's go with this low bucket. And so they came in at 1.3. That is much better than I had forecast. 715 on admissions. They came in closer to my middle target than my low. So that is good. Operating income. Including the one-time charges, the other expense of $194 million was negative $297 million. That was the ouchie. Cash $365 million. Net cash used in operating activities $14 million. Who said 80 million? What are you looking at? AMC burned $94 million in operating cash. I'm seeing 15 million. They did have negative free cash flow, and when you add in CapEx of 81 million. That's why I mostly look at free cash flow. It's useful to look at net cash used in operating activities, but when you have a high CapEx for maintenance and growing the business, you gotta consider free cash flow. And not just one quarter, when you gotta look at it for the year. So for the 9 months, we're at negative 400 million in free cash flow. I mean, that's your ouchie right there. Ouch. Mike says market share was very good. Interest expense up. I did tell y'all the interest expense was going to go up. I know some of the YouTubers, they keep on getting this wrong. Bless their hearts, saying the interest is going to go down because of the debt refinancing. Most certainly is not, because the rates all went up, and I've provided, I forget how many videos, telling you guys and showing you spreadsheets of how I was calculating that the interest expense was going to go up. What did it come in at? 119. What did I forecast? Based on my math, I forecast 118. Oh, Tony. I had said it was going to go up from 109 to 118. I was off by $1 million, but I'm going to say, you know, for an amateur dipshit like me, being able to forecast that within $1 million, it's not bad work. It's not bad work, especially when everyone else was telling you interest expense was going to go down. Get out of here with that. Learn how to do math. I love you, though. I love you. I'm sure the hearts were in the right place. Button Bun says, does this mean if AMC stays with negative free cash flow, they have cash for 3 to 4 quarters and they must dilute next year? We have $364 million in cash on the balance sheet right now. Next quarter, Q4, we are expecting, including me, positive free cash flow. And then we start getting in trouble again in Q1 when the bills got to be paid. Is my rough estimate right now. Q4 we should sail through okay. So when we're thinking about how to vote, we need to think not just based on what Q4 is expected to be, but what happens after that. That's why the next videos that I do for you guys, as we start thinking about the vote, I'm going to be doing a 5-quarter forecast. 5-quarter box office, 5-quarter free cash flow, 5-quarter cash balance. Because really, I'm trying to think like Sean Goodman, not with hopium hat on, not with we're going to win, you know, using just common sense. Look at the box office, use my spreadsheet model, forecast free cash flow. It's how I've avoided the last 3 dilution events. And figure out, are we going to be in trouble if the vote doesn't pass? And we'll talk about that in some upcoming videos. Anya says, have Scarlett write that mistake down in her journal that I was off by 1 million. We're going to call that a win no matter what, Anya. If I can get that close, I think I have some, yeah, these are the little worksheets that I use to estimate what the interest rate is going to be. This was all my work, looking at previous, looking at the new, the net premium discount, the amortization, and then run some math formulas. I came up with 117.7. So I put in 118 and I highlighted it yellow because I don't know. It's a guess. Came in at 119. I'm not happy about that. I'm not happy that look at this, the interest expense was 90 million 6 quarters ago. Now we're at 118. That's $30 million increase. And they keep paying off the debt, but they keep on getting worse interest rates. And that's not because they're bad negotiators. It's just a function of box office. We need better box office. We need y'all going to the movies We need y'all buying concessions. I can't do this by myself, y'all. So Two Bummun says, if AMC stays with negative free cash flow, they have cash for 3 to 4 quarters. They must dilute next year. I think there's going to be some really good quarters next year. So I haven't completed my 5-quarter analysis yet, but I'm not predicting doom and gloom on the liquidity front. I'm also not, my crystal ball can't tell you for sure with absolute certainty what happens, but I'm not predicting gloom and doom liquidity wise yet or at all. I haven't even finished my analysis yet. So what I can tell you though is even if there is no liquidity issue, even if every quarter next year is great, what is the company's number one priority right now? Fixing the balance sheet. So there will be dilution to repair the balance sheet, even if they don't need cash to keep them alive. Why is that? Because they have negative $900 million on working capital. You gotta fix this stuff to get a better credit rating. Negative $900 million working capital and negative $1.7 billion shareholders' equity. This is what we call a functionally bankrupt balance sheet. They have to fix it, and Sean knows that, and Adam knows that. So there will be more dilution coming. It'll be debt for equity swaps. Here, we're going to give you shares. You wipe away that debt. Everything gets better on the balance sheet. But for common, it's going to negatively impact you. The ideal would be that they only do that into strengthening box office, strengthening chart, strengthening stock price. That would be the ideal, that they utilize patience and everybody pray that the box office goes up so AMC can negotiate on strength, not on weakness. That's a you guys thing, and Hollywood too. Got to put out some good movies. Balance sheet has to be fixed. Jeed Productive says, is this your full-time job, analyzing companies? Back in, I've worked corporate life for 15 years, and then I left that life 20 plus years ago. Mr. Who was it? Jeed Productive. So I've been doing my own thing for 20 years plus. And in 2020, when the economy crashed, some of the businesses I had got crashed with it. I had to get very creative in coming up with other things to do in 2020, and I did. I started several new businesses to capitalize on what was going on with the economy at the time, and did very well with those. And I'm sitting here day trading all along as well. And I missed GameStop, and I got lucky and got in AMC early and made a lot of money on call options. I got really mad at Trey and Matt telling people to buy call options as the stock was climbing 30, 40, 50 bucks. I was selling my call options. And so then I started the YouTube channel. But do I just sit here and day trade all day? No, I have other businesses that I run from home, and I'm trying to avoid ever going back to the real world of having a 9-to-5 job. But somehow I've managed to avoid that for 20, 25 years now. People would say, Tony, go get a job. Why? I'm doing all right. You're not legit if you don't have a job. Hey, I will scrap it out. I did that 15 years of slave labor to the man. Felt like 30. But I do have the luxury to answer your question of being able to sit here all day and analyze stocks. And I use that free time often to do it. All right, let's see if we got an earnings call going on yet. Hang on one second. Still got music. Should be starting any moment. Can I check DUOL? Duolingo, not Dua Lipa. It's down 21%. What was the news? Soft bookings forecast overshadows revenue beat. So management guidance is forcing the market to readjust how they're looking forward to the earnings for the next year, or at least the next several quarters. So I find that typically the market is usually pretty efficient at readjusting the price real quick, but sometimes they overshoot to the downside. So if you're really familiar with the company, sometimes you can get a buying opportunity. Sometimes just sit back and spend a day looking at it. Did we pick a word yet, Dan? Still got music. What do I think the AMC spike was? I don't know. But it was worked back out of the system within 10 minutes. Johnny says, I'm hitting 15 years corporate next month. It feels like 30. Yeah, I had a job, Johnny, in high tech where I was up every morning on conference calls with Europe. I'd go to the office, work 10, 12 hours a day, come home, cook a dinner, and then I'd be on conference calls with Asia, Taiwan, or China in the evening. And it literally was nonstop. And that was, on top of that, I was out of the country half of every year. Boy, it was exhausting. And then, you got 10 hours of meetings a day, but you can't open your laptop during the meeting because that's rude. And the VP said that's frowned upon. So what do you do with your 1,000 emails a day when you're in 10 hours of meetings? It really was getting irritating there at the end. I was like, you know what? Thank you, but I'm going to see myself out. Why do we still have music? The thing that made it worth it for me is my company paid me very well, and we got stock options as awards. And I was in management, so I got good bonuses, both in cash bonus and stock option bonuses. And my company was growing very quickly, like stock splits every year or two, and it would just keep growing. I forget how many stock options, what it ended up being worth, $1 million or something like that. That was just lucky. I didn't do anything smart other than lucky timing on a small tech company before it got big. All right, here we go. Let's see what the poll said. All right, Dan, the word is popcorn. I'm going to get my last bottle here. Are you going to drink, Dan?
filings, including our most recently filed 10K, and so the company will be under control for position. In light of the full statement, against relying on financial measures such as
Sorry.
free cash flow. For a full reconciliation
You
of our
haven't missed
non-GAAP
anything yet.
measures to GAAP results, please see our earnings.
They're still
release
doing all the
posted in the investor
disclosures.
relations section of our website earlier this afternoon. After our prepared remarks, there will be a question and answer session. This afternoon's
Is that better?
broadcast is being recorded, and a replay will be available in the investor relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Adam.
Thank you, John, and good afternoon, everyone. Thank you for joining us today.
Give me a thumbs up if you can hear him okay. It
At
looks like
AMC, we're especially pleased that with revenue of precisely $1.3 billion and adjusted EBITDA of $122 million, yet again, for another quarter, AMC Entertainment comfortably beat Wall Street consensus assessments for both our revenue and adjusted EBITDA. As has often been the case in the recent past, AMC's leading market position and the skills demonstrated in the implementation of our numerous and important marketing, operations, and cost containment strategies allowed us for yet another time to overperform the expectations of those who underestimate us. As we look at AMC's third quarter results, and for that matter, the full year to date, calendar year 2025 is turning out exactly, and I mean exactly, as we have long predicted. Due primarily to the timing of major studio film release dates, a weak first quarter was followed by a blazing hot second quarter, which then was followed by a softening third quarter. We continue to expect, however, that the year will culminate in what we hope will be quite a strong year-end in quarter four. Hello, Universal's Wicked for Good. Hello, Disney's Avatar Fire and Ash. Indeed, a broad array of appealing movie titles will be coming out before year-end. Our prediction of a so-so third quarter industry box office turned out to be true, as the North American box office declined some 11% following tough comparisons against last year's strong third quarter. But when evaluating AMC's performance in the context of the third quarter's challenging industry-wide environment, I see our company firing on all cylinders: marketing prowess, operational strength, financial discipline. All are direct evidence that AMC is very well positioned to capitalize on the box office growth that we believe lies just ahead. Remember that about 2/3 of our incremental revenue drops to the adjusted EBITDA line. So, when industry revenues rise, which we believe they will in Q4 of 2025 and again throughout 2026, AMC's financial results should rise even more rapidly. The third quarter industry-wide softness should not be a cause for alarm, nor a harbinger of some negative trend about which to hand-wring or worry. To the contrary, we expect that the fourth quarter industry-wide box office will turn out to be the highest grossing fourth quarter in 6 years. We also continue to believe that the size of the 2026 box office will be dramatically larger than that achieved in 2025. There are clearly bright spots in AMC's third quarter financial results that bode well for AMC, with an expecting rising industry-wide box office in the fourth quarter of this year and again throughout 2026. Specifically, AMC outperformed the industry, achieving all-time record admissions revenue per patron of $12.25. In addition, food and beverage continues to be a shining success for us, as we achieved the second highest food and beverage revenue per patron in our company's entire 105-year history of $7.74. Combining revenue increases with aggressive cost management, it is noteworthy that in the third quarter, we grew our consolidated contribution margin per patron by 9.2% compared to the prior year, and this metric is now approximately 54% higher than it was pre-pandemic in 2019. The improvements in our efficiency as a company are one of the reasons we are standing proud and tall today. Despite an industry-wide box office that was well below the third quarter of last year, AMC also generated improvements to cash used in operations and in free cash flow when compared to the same time of a year ago. And also, looking at the third quarter, it is especially satisfying to us that in the United States, during the third quarter, AMC significantly increased its market share. So much so that in looking at studio-reported grosses for the full year to date, January and September, AMC's market share increase handily outshined that of any other movie theater circuit in the country. AMC's share now approximates 24% of the domestic box office versus 15% for Regal and 15% for Cinemark. Taking out Canada, where we have no theaters, AMC has a 27% share of the U.S. box office, Regal and Cinemark 16% each. Marcus has just under a 3% share. No other U.S. circuit has even a 2% share. AMC is now about 50% larger than our two next nearest competitors. And we are 10-ish times the size or more of everyone else. Our market share increases this year
I'm not sure why complaining, bragging about size while you're losing money due to low box office. I don't get it.
Magnitude of our market share that is so particularly compelling, because as the box office grows over the next 14 months, as we believe it will, AMC is better poised than anyone else to reap the benefit therefrom.
Well, that is true if box office grows.
We believe all this sets us up so very well as we look ahead, given what AMC believes will be a rebounding industry-wide box office going forward, coupled, of course, with all the actions and improvements being made specifically within and across AMC theaters in the United States and Odeon cinemas in Europe. As previously announced, perhaps more important than any other accomplishment during the third quarter, AMC successfully completed several transformative capital markets transactions that greatly strengthened AMC's financial foundation. We refinanced $173 million of debt maturing in 2026 and equitized $143 million of exchangeable debt, the latter of which in turn was subsequently increased to $183 million of equitized exchangeable debt without the issuance of any additional equity or additional use of cash. Going forward, we will continue to take the necessary actions to enhance our balance sheet and position AMC to capitalize on what we believe will be a multi-year industry recovery.
I hope you listened to that sentence 3 times.
Let me add that we are tremendously excited about the film slate coming in the remainder of this fourth quarter, both with blockbuster titles and also with more intimate storytelling. It all starts this weekend with Disney's action-packed Predator: Badlands, coupled with Sony Pictures Classics' Nuremberg. In November, we also will have Lionsgate, Now You See Me, Now You Don't, Disney's family favorite Zootopia 2, Paramount's The Running Man, and Universal's acclaimed and much-awaited return to Oz with Wicked for Good. Not to be outdone, December brings more excitement with Universal's chilling Five Nights at Freddy's, Paramount's animated adventure The SpongeBob Movie Search for SquarePants, Focus features Song Sung Blue, and the third chapter of Disney's epic saga from the brilliant mind of the legendary James Cameron, Avatar, Fire and Ash. What a lineup of movies. With that and all the other highly anticipated films that will be coming out in November, December in addition, we believe the fourth quarter box office will surpass that of last year and notch 2025 as the largest post-pandemic box office year yet. Of course, that all depends on ticket sales in November and December. We'll all know for sure in about a couple of months. To put an exclamation point on that expected box office growth in the near term, if one sets aside the anemic first quarter of 2025, the domestic industry-wide box office has actually been on a $10 billion pace since April 1. That is a number that is so very much larger than the calendar year box office recorded for either 2023, 2024, or the current year, 2025. What's more, knowing of the long list of great titles coming from our studio partners in 2026, we envision a strong and robust film slate is on the horizon for the full year ahead. Sean, let's go into the quarter in more detail.
Thanks, Adam, and thanks everyone for joining us today. As predicted, the third quarter was relatively soft compared to last year. Nonetheless, while the North American box office was down 11%, AMC's consolidated admissions revenue was down by only 3.9%, and domestic admissions revenue was down by only 5%. This reflects the meaningful growth in our market share, thanks to the power of our premium large format offerings, unrivaled loyalty programs, innovative marketing, promotions, and pricing. This afternoon, I'd like to focus my comments on several key third quarter performance metrics that clearly demonstrate underlying strength of our business. Our consolidated revenue per patron increased by 7.5% versus last year and is now 47% above pre-pandemic Q3 2019. This remarkable growth is driven by a 60.5%, that's 60.5% increase in food and beverage revenue per patron and 33.8% increase in admissions revenue per patron, all relative to Q3 2019. These are impressive metrics, yes, but even more important is the incremental profit that we generate with each additional moviegoer. Our measure of this is contribution margin per patron, and we define it as total revenue minus both film exhibition and food and beverage costs divided by total attendance. In the third quarter, we grew our consolidated contribution margin per patron by 9.2% compared to the prior year, and this metric is now approximately 54% higher than in 2019. From a segment perspective, our U.S. operations delivered a truly exceptional quarter. Consider the following. In Q3 2025, our domestic adjusted EBITDA reached $111 million. This is nearly $4 million more than in Q3 2019, despite us selling 18.9 million or 31% fewer tickets than we did in Q3 2019. This achievement was possible because domestic revenue per patron was 50% higher and domestic contribution margin per patron was 57.5% higher than in 2019. Turning to our Odeon operations, the European industry was challenging in the third quarter, with attendance at our Odeon cinemas down 11.4% versus the prior year. Nonetheless, the business continued to deliver strong fundamental results, with total revenue per patron up 13% and contribution margin per patron up 14.4% compared to last year. Total international revenue per patron is now up 37% versus 2019, and international contribution margin per patron is up 42.2% compared to 2019. These results are evidence that the box office does not need to fully recover for us to achieve pre-pandemic levels of adjusted EBITDA. This is thanks to a combination of initiatives focused on theater portfolio optimization, operational efficiencies, food and beverage innovations, industry-leading marketing programs, and the ongoing success of our AMC Go Plan. Over the last few years, we have taken meaningful steps to optimize our theater portfolio. This includes rent negotiations, the closure of underperforming locations, and selective capital deployment in new and existing high-performing locations. In 2025 alone, we closed 20 locations and we opened 3. And since January 2020, we've now closed 212 locations and opened 65 for a net reduction of 147 theaters, or about 15% of our fleet. Going forward, we'll continue to strategically manage our theater portfolio to optimize profitability. Moving to the balance sheet, we ended the quarter with cash and cash equivalents of $365.8 million. This excludes restricted cash of $51.1 million. Our free cash flow in the fourth quarter will inevitably be dependent on the box office during the next 2 months. Provided this turns out in line with our expectations, we anticipate being free cash flow positive for the 9-month period ending December 31st, 2025. From a capital expenditure perspective, we expect full year 2025 CapEx, net of lease incentives, to be in the range of $175 to $225 million. Our capital allocation priorities remain: 1, maintaining adequate liquidity and financial flexibility. 2, strengthening the balance sheet. 3, elevating the guest experience. 4, pursuing high-return growth initiatives. This disciplined approach to capital allocation reflects our commitment to building an increasingly strong and resilient company to deliver long-term shareholder value.
I heard the second one was repair the balance sheet. What did he say the first one was?
About debt, finance leases, and COVID-related lease deferrals by nearly $1.5 billion. And we're not yet done. We'll continue to take decisive steps to strengthen our balance sheet so that we are increasingly well-positioned as the box office recovery continues. In closing, AMC's third quarter results underscore the meaningful progress that we have made over the last few years. With a promising fourth quarter already underway, a robust film slate ahead, and an improving capital structure, we believe AMC is exceptionally well-positioned to capture the full benefit of the industry's continued recovery and to deliver long-term value for our shareholders. With that, I'll pass the call back over to Adam.
Thank you, Sean. Before we take your questions on this webcast, I'd like to touch briefly on 5 different points. First, AMC Theaters Distribution took another bold and imaginative step forward in the third quarter of 2025 when we partnered again with the iconic one and only Taylor Swift to highlight the debut of the 12th studio album in her astonishing career. All the planning occurred within the third quarter for our theatrical release on October 3 to 5 of the one weekend screening of Taylor Swift, the official release party of A Showgirl. This unique theatrical event.
Ooh, good thing we didn't do Taylor Swift for the buzzword, Dan.
500 movie theater screens in the United States and across some 56 countries, generating some $50 million in box office receipts in a weekend, $34 million domestically, and another $16 million internationally. We're proud that Taylor Swift, the official release party of A Showgirl, came in at number 1 in the domestic box office for its opening weekend. We're also proud that it was graded an A+ on CinemaScore and in the high 90s on Rotten Tomatoes. And as a result, that we put so many smiles on the faces of millions of Taylor Swift fans globally. These impressive results speak to the strength of AMC's innovative distribution abilities, not only bolstering AMC's results, but also contributing to the health of the overall industry. The numbers in the Taylor Swift project speak for themselves. To that end, here's a number for you, 7.5. 7.5, you ask? It is incredible to think, but from start to finish, from the time of our very first phone call about this potential project to generating from some 56 countries fully $50 million in box office ticket sales receipts, plus, of course, food and beverage revenues in addition, AMC pulled all this off in only 7.5 weeks. 7.5 weeks from first conversation to completed project. And going back to the concept of our success in increasing AMC's outsized market share in the U.S. and Canada, of course, we take some real satisfaction that our normal market share has now grown up to 24%. But on the Taylor Swift official release party of the Showgirl event, AMC's market share was an ever so ebullient 36%. As excited as we are by the numbers, it is especially gratifying to us that after our immensely successful 2023 experience with Taylor, she came back to AMC for another round in 2025. What a compliment it is to AMC that the Swift family was so pleased with us that they came back another time. I've said this often before, but I want to say it again. Our every interaction with Taylor, with everyone in the Swift family, and all the people in her camp, all those interactions, every single one, has been nothing less than a true joy and an honor and a privilege for AMC. I say this with all the sincerity I can muster. Thank you, Taylor. We are so proud to be a small part of your team. This all leads us to believe, by the way, that while our bread and butter will always remain the vast output of the current studio system, in the future, there also is clear opportunity on an incremental basis for AMC to create and distribute more theatrical content. Second point, speaking of adding more content for our screens, I am especially optimistic that we can do more on a cooperative basis with Netflix. During the third quarter, we opened a new dialogue between AMC and Netflix that led to our showing K-pop Demon Hunters over Halloween weekend. Not surprisingly, given our array of theaters and our loyal customer base, AMC generated more than a third of all the U.S. theater guests seeing K-pop last weekend. The talks with Netflix are in their infancy, and we do not know yet the ultimate size there can be for this potential cooperation. There is much still to work out, especially, for example, on Windows. But even so, realizing that Netflix is a great company and the largest streaming service on the planet with an enormous amount of content, and that AMC is the largest movie theater chain in the world, sitting here today, I am highly confident that there is more to come with our two companies working cooperatively together. Stay tuned. Third, again, on generating more content, given the success we've demonstrated with Taylor Swift and Beyonce, and when you factor in that we have now built the technical capability, and this is unknown to many of you, to be able to live broadcast events to 277 of our 530 theaters in the United States, and to a similarly large percentage of our theaters in Europe. I believe there is dramatic opportunity for AMC to broadcast live concerts and live sporting events on our giant screens. We intend to make this pursuit one of our highest priorities for 2026. Fourth, when talking of giant screens, no one in our industry is anywhere close to AMC in the area of offering premium large format screens, extra large format screens, and other premium experiences. With 223 IMAX screens globally, and right at around half of the IMAX screens in the United States, we are a significant recipient to share in IMAX's obvious success. Heretofore, our recent monies have been concentrated on improving the quality of our IMAX screens, enhancing them greatly through a multi-year effort to convert almost all of them to the much preferred IMAX with laser at AMC concept and format. That format includes laser projection, much enhanced sound, more attractive visual in auditorium aesthetics, and more comfortable seating. Depending upon your view of the terminology, that effort to upgrade our IMAX theaters to IMAX with laser is now either in the back stretch or the home stretch, such that we are now turning our attention to another notion that we have in fact entered into discussions with IMAX about once again increasing the number of our IMAX locations as well. Similarly, we are so incredibly pleased with our investment in Dolby Cinema PLFs, which are doing so very well for AMC. We currently have 177 installed globally, and as we announced earlier this year, we are so confident in our success with Dolby Cinema that we would like to grow that count of Dolby auditoriums by around 25% over the next few years. And while today we only have 6 ScreenX auditoriums and no 4DX auditoriums, again earlier this year we signed an agreement with CJ to exponentially increase our count of their 2 premium offerings within the AMC and Odeon fleet of theaters. Not to be outdone only by our so-called third-party PLFs, AMC also has 147 of our own house brand PLFs, primarily branded Prime in the United States and iSense in Europe. I would expect that in the next couple of years, our house brand PLF locations will also grow in numbers, and specifically that with Prime in the United States, we will double, possibly even triple, the number of our Prime auditoriums. And in a fast-moving advance for AMC, we've moved ever so quickly to introduce what we call our extra-large format screens with our new XL offerings, which I might add command a price premium in ticket price. Launched just a year and a half ago, we already have 151 XL screens installed and delighting moviegoers, 67 in the United States and 84 in Europe. By next Christmas, that number should about double. I expect that we'll have in the vicinity around 300 or so XL screens in full operation a year from now. You all likely know that premium large format and extra large format screens greatly appeal to moviegoers. But what I find particularly impressive is that we have pulled off this great commitment to increasing and enhancing our premium experiences, all the while living within our very tight $175 million to $225 million annual net capital expenditures targets. And finally, the 5th point, as you might expect, AMC is actively canvassing how AI, artificial intelligence, can be used both to make our company more efficient, but also to dazzle our guests. We're already using AI internally in many ways, and our use cases will increase dramatically in 2026 and beyond. But especially interesting, during the 3rd quarter, we found our first way to participate in AI-powered technology that already is dazzling those people seeking engaging out-of-home entertainment. In August, we made a single-digit multi-million-dollar equity investment in Nova Sky Stories, a company brilliantly conceived and led by its visionary founder, Tesla board member Kimball Musk, and brother of Elon. Nova Sky Stories was created a few years ago when Kimball acquired the former aerial drone division of Intel. He has since turned its cutting-edge and leading AI-powered technology into also crafting extraordinary storytelling aerial drone shows that fascinate both free guests and paid ticket buyers alike. Key in on that paid ticket buyers notion. As Nova Sky Stories creatively lights up the dark evening skies with its just wonderful aerial drone light shows. Nova's most recent effort was in September, a truly mind-bending Grace for the World concert and aerial drone light show that took place over St. Peter's Square in Rome in full cooperation with the Vatican in conjunction with its Jubilee. You can see footage on Disney Plus, which telecast it live, and stunning excerpts can be found throughout YouTube. The next incredible Nova Sky Stories show will take place at the Rose Bowl in Los Angeles just next weekend on Saturday, November 15. For more information, check out www.novaskystories.com. That's NOVA for Nova, skystories.com. In addition to just investing in this company with what we expect will be its explosive growth financially in 2026 and 2027, there is much that AMC Entertainment can and will do together in cooperation with Nova Sky Stories. More details about that to come in the coming year. I'll wrap up our webcast today by saying that AMC is so very excited about the 8-week sprint that we have in front of us to finish out 2025. Over the next 2 months, it will be movie after movie after movie. I can't wait for Nuremberg this weekend. And I was not alone when I found myself crying in the movie theater while I was viewing an advanced screening of Focus Features movie coming out at Christmas, the remarkable Song Sung Blue. After all, as our very own Nick Kidman has said for some 4 years now, sometimes heartbreak feels really good in a place like this. And of great importance financially to AMC, advanced bookings for Wicked for Good are through the roof. They exceed the advanced bookings that we previously had at the same time before release for the original Wicked movie of a year ago, which itself was a global triumph, both for Universal and for AMC. And then, what is there to say to James Cameron, storyteller extraordinaire? The entire world is on pins and needles waiting to see your latest sure-to-be masterpiece, Avatar, Fire and Ash. With that, Sean, let's go to questions from our shareholders and from analysts.
So, Sabrina, could you repeat the instructions for our analysts online?
Absolutely. Thank you. If you'd like to ask a question, please press *1 on your keypad. To leave the queue at any time, press *2. Once again, that is *1 to ask a question, and we'll pause for just a moment to allow everyone a chance to join the queue. Once again, if you'd like to ask a question, please press *1 on your keypad now. And we'll take our first question from Eric Wolf with Texas Capital Securities. Your line is now open.
Thanks. Good afternoon, Adam and Sean. Question a little bit on kind of the concessions and ticket prices. I know obviously you had some great success driving up the per patron spending over the past couple of years with a lot of the initiatives you had within the theater. Just want to talk about kind of the baseline pricing kind of below the surface, given the consumer environment we're in right now. Maybe talk a little bit about the pricing power, maybe the price increases that you've been kind of pushing through on both tickets and concessions. I guess starting with tickets, have you been pushing up baseline ticket prices kind of across the board, or has the focus mostly been on the various premium pricing options, IMAX, and whatnot, kind of letting the consumers kind of choose to pay the higher prices for the premium options versus raising prices across the board on all the tickets? And then on concessions, kind of what are your thoughts on kind of price increases up and beyond the need to offset kind of inflationary headwinds right now, if you feel that's something that moviegoers would be accepting in this environment, or if that's something that you think is kind of that maybe kind of need to wait a little bit and get a little further into 26?
That's a question. Thank you, Eric. Nice to talk to you again, as always. I have to be we're happy to talk to the point, but I got to be very careful because it is patently illegal to talk about pricing thoughts on a going forward basis, because that could be interpreted to mean signaling to competitors. But I can comment on our pricing actions previously, and you can read into those whatever you want to read into those. If you look at our ticket pricing of $12.24 that was achieved in the third quarter, which is on a consolidated basis, it was the highest number we've ever had in our history. And if you look at our ticket pricing, it's risen pretty substantially over the past several years. It's moved at a pace much faster than general consumer inflation. And I would especially point you not only to looking at our consolidated prices, but looking at our prices by geographic segment. Our prices have increased in Europe, and our prices have increased in the United States as well. But I think what's really interesting is, yes, some of those price increases derive from our growing commitment to PLFs. But we've also not been shy in taking ticket pricing up. And in fact, if you go back to May of 2025, just 6 weeks before the third quarter began, knowing that we had some big movies coming in June and July, we did take across-the-board price increases, not at all of our theaters in the United States, but I would say most of our theaters in the United States. And those price increases vary theater by theater and market by market. But prices did go up. And they went up because we think, again, I want to be careful only to talk about what we've done looking backwards, not looking forward. Our thoughts then were we ought to cleverly price. It goes back to your very first economics class in the freshman year of college, when you learned the laws of supply and demand and the laws of charging prices in the peak and charging different prices in the so-called off-peak, charging more in periods of high demand and charging less in periods of low demand. So we have not been shy in taking prices up at those theaters with the most demand. We have not been shy in taking prices up on Friday and Saturday nights when demand for our theaters is at their peak. But one of the things that gave us comfort in being able to put those prices in, those price increases into place, is that we also have been maniacal in finding intriguing ways to discount prices for bargain hunters. And the two biggest examples that come to mind are A-List. We now have almost 1 million members of our A-List program. And, you know, those people, it's out of this is, we have a similar program in Europe, I might add, called Limitless. But just talking about A-List in the United States, it's only 1 million consumers, just under. It's only 1 million consumers out of a population of 330 million people. But these people account for 15% of our total patronage at AMC. That's like an incredible number from only 1 million people. And those people are paying between $20 and $28 a month. And on average, they're seeing 2.4 movies a month on average. But they're entitled to see 4 movies a week. That's theoretically 17 movies a month. And they're getting all that for, depending upon what geographic market they live in, between $20 and $28 a month. For people who want to seek out a bargain, that's a good bargain. The second bargain that comes to mind, in what I think was a bold initiative by AMC that was announced effective with Tuesday, July 8 and Wednesday, July 9, and what we said would be a permanent feature going forward. We expanded our longtime Discount Tuesday offering for AMC Stubs members to Discount Tuesday and Discount Wednesdays for AMC Stubs members. Now, it's free to join AMC Stubs, and you can do it instantly merely by giving us your email address. So anybody who wants to take advantage of the new Tuesday, Wednesday discounts can do so. we made the level of the discount much more dramatic by positioning it as a 50% discount to the typical evening list price on a standard auditorium. So it's a powerful discount. It's available on twice the number of days per week that it was for the last 15 or so years when the movie industry thoroughly, had Discount Tuesdays. The fact that we now have 50% off Tuesdays and 50% off Wednesdays also is a tremendous enrollment device to encourage moviegoers to join AMC Stubs. They only get the discount if they're AMC Stubs members, but as I said, you can easily and instantly join. And so, AMC is committed to offering bargains, but we've also proven in the past that we believe we not only can offer premium experiences, which in themselves command premium prices, but we believe, and we demonstrated through our past actions, again, not signaling about the future, that we are willing and able to raise price across the board. As for food and beverage pricing, I'll let Sean talk to that and our otherwise impressive strength in the area of concessions.
Thanks, Adam. Clearly, food and beverage is a key focus area for us, as one would expect, right, because of the profitability of that segment. And when we look at our food and beverage business, the key drivers of our food and beverage per person are the percentage of people participating, going to the concession stands and buying food and beverage, the number of units that they buy when they go to the concession stand, and the price they pay. And if you look at the increase in food and beverage per person versus pre-pandemic levels, all three of those factors, participation, units per check, units per transaction, and price, have been part of that significant increase in food and beverage per patron. If you look just at Q3, then in Q3, the percentage participation and the price were the biggest drivers of our food and beverage increase. To drill down on the price aspect of that food and beverage per person in a little more detail, I think there's a couple of factors here. One is the price is impacted by mix, right? What are our guests buying? And as we've added collectible concession vehicles, we've increasingly focused on movie-themed drinks and movie-themed cocktails, that's really helped to increase the price, even if actually the price for the regular item hasn't changed. That you have that positive mix impact, and we see that still being very, very beneficial for our business. The other thing to say about price is we've been very analytical with the data that we have on pricing. So really looking at individual theaters, individual market locations, where can we take price, where should we reduce price? We're very focused on that. And then we're always offering opportunities and discounts, as we spoke about the discount days. If you look at the food and beverage, we have discount food and beverage offerings on those discount ticket days as well. So there's something available for the consumer. But again, it's sort of food and beverage is really critical to our business and been a big part of why we've been so successful in our per person metrics as we've gone through the recovery.
And if I can add, Eric, sort of, I think, getting to the thrust of your question as opposed to factual answers, I think you were trying to inquire, do we think, with angst in the general economy and are we somehow constrained by consumer sentiment that somehow our pricing actions will be limited? And again, I don't want to make any kind of speculative comment about what we will do in the future, but I would like to point out this fact. I don't feel, I think we have to be, I always think one has to be prudent in not taking prices up too quickly, but I don't feel any price limitation from our clientele. The fact that our premium screens sell out first tells us something. The fact that we introduced 151 XL screens that already were screens that already existed in our theaters. They were bigger than the other screens in our theaters, and we just slapped the XL logo on the door to remind people it was a bigger screen, and that we're able to command almost a 10% price premium from those XL screens. But here's like one other little factoid that shows you that I believe that our consumer is willing to pay for what we offer. Our merchandise business was literally non-existent 3 years ago. Non-existent. I mean, like $0 in revenue from merchandise. This year, 2025, globally, U.S. and Europe combined, it's going to be over $65 million. And if you look at the price points of some of these merchandise items that we're selling at the concession stand, it's not hard to find items that are priced at $15.99, $19.99, $29.99, more than $30 a pop. And like literally, one of our biggest problems is that we're selling out too quickly. We're often sold out. We're sometimes ordering 50,000, 100,000 of these units in the United States alone, and we're selling out on the first night or two. It's a high-class problem, and you do have to order this stuff 9 months in advance and get it shipped in economically. But, I mean, it's just another example. Consumers are willing to reach into their pocket to pay us for the experience that we offer, provided that we do a good job of it. And that's why we work so hard to keep our theaters in good shape. That's why we work so hard to keep our film crew staff motivated and treating our guests well. And, you know, just look at the results. Highest ticket prices in our history, second best food and revenues per patron. I guess it's ticket prices per patron in our history. Second highest food and beverage revenues per patron in our history achieved in this third quarter. With that, operator, I think we're going to turn to some shareholder questions. Sean, what's the first question from our shareholder base?
Yes, there's been a lot in the press about the Warner Brothers situation, and people are interested in what our comments on that are.
So it's a little premature to speculate about what's going to happen at Warner Brothers. There are some, obviously, who believe that Warner Brothers will stay independent. There are others who obviously are aware of Paramount's repeated offers. There are other potential suitors for Warner who seem to be emerging. Let me just say this, because it's not a reality yet, and so there's no real need to speculate too much. I would like to comment that AMC is thrilled beyond thrilled that David Ellison and his organization, led by Jeff Shell, have bought Paramount. We think they're going to do a spectacular job, and they have committed to greatly increasing the movie count that Paramount will be releasing going forward. Paramount was down to 7 movies a year. We think that Paramount is on record as saying they want to more than double that movie count as quickly as they can under the ownership of David Ellison. Similarly, Warner Brothers has told us that they also, I think they were down to 11 movies in 2025, and they also would like to be and are committed to increasing the release of more movies in 2026 and beyond. That also is very good for AMC. So I guess with respect to any potential studio consolidation, our attention will be laser focused on one issue and one issue only, and that is the count of movie releases, excuse me, that's coming out from studios. Clearly, if it's more movies, that's good for AMC, and if it's less movies, that's not as good for AMC. So we're watching closely, and what we're watching more than anything else is will the number of movies being issued going forward go up or not? Next question.
We've had, and we were just talking about it a few moments ago, and we've had a couple of quarter after quarter of really, really strong performance metrics for the business. And kind of related to the question we just discussed as well is people are asking, so how sustainable is that? Can we continue to keep these key performance metrics at this high level as the industry box office continues to recover?
I'm completely convinced that we can keep these metrics strong, that they are, in fact, not flukes, but sustainable, and that we can grow them. And what gives me that confidence is we've been growing them now for 6 years, since 2019, or really in the last 3 years since the box office sort of got semi-respectable post-COVID. And we apply as a company so much attention and brain power, mental acuity, to getting those metrics up. They didn't happen by accident. And we'll apply that same emphasis on keeping those metrics strong and growing looking ahead. You know, there are two numbers that kind of float in my head more than anything else about how AMC survived the last 5 years. Because look, the industry box office is still 20% down from pre-pandemic levels. That's a problem. Some people don't want to admit that's a problem, but that's a problem. It would be much easier for us if we can see the box office grow to what we hope will be a much larger pace in 2026 than it's been the last 3 years. And as I said in my prepared remarks, if you look at the 9-month period from April 1 to December 31 of 2025, the industry has not been on the $9 billion pace that it will probably be on for 2025 calendar year, but a $10 billion pace. And it sure would be nice if that's the pace that we have going forward. In a rising box office environment, AMC does very well because 2/3 of our incremental revenue drops to the EBITDA line. It's not a linear relationship between rising box office and rising EBITDA. It's an exponential relationship between rising box office and EBITDA. This same attention that we're paying to keeping these metrics strong comes much more easily in a growing box office. The other metric, the number that, as I said, there are two numbers that float in my head. Look at our contribution per patron. Our contribution per patron, pre-pandemic 2019 versus today, it's up 54% in 6 years. 54% increase in contribution. We would not be alive today had it not been for our ability to increase our contribution patron per margin by 54%. We are simply a much more efficient operator than we were pre-pandemic, and we don't need the box office to come all the way back to pre-pandemic levels for us to be very successful at the EBITDA line. This other number that floats in my head, of course, is we raised $4.5 billion of equity over the past 6 years, and $2 billion of debt, which we have since repaid off. Not only the $2 billion that we raised, but we paid off more than $1 billion more than that. So our debt levels are actually lower today than they were going into the pandemic. But we still owe so much gratitude to our shareholder base, especially our retail shareholder base, who stayed with us all these years, because their belief in our future, their willingness to let equity come into our coffers, to keep our cash reserves robust and healthy and strong, are why we made it. Next question.
Do you want to comment a little bit about the M&A environment? We recently noticed Canopoulos' acquisition of Imagine Entertainment, and any thoughts on the M&A environment in this industry for us?
Sure. So we ended the third quarter with $363 million of cash on hand. Every dollar of that cash is earmarked. So now's not a great time for us to be diverting cash to other strategies other than running our company well and strengthening our balance sheet. Similarly, we are out of shares. So it's not like under the current situation, we could use share equity capital as a currency for M&A activity. Having said that, over time, our cash reserves will grow from whatever means. And when I look at the M&A environment, it looks quite attractive to us right now. Canopoulos, a very high-quality operator in Europe, bought 14 movie theaters in the United States at 5 times trailing EBITDA, 5 times. No, it's only 14 theaters. Like you couldn't buy AMC for 5 times EBITDA because we're 900 theaters, not 14. But it does tell you that there are plenty of movie theater circuits out there who have less than 1% market share, less than 2% market share, where we, AMC, if we had cash to deploy for M&A purposes, could pick them up at bargain levels, and then arbitrage them into being worth much more if they were part of the AMC network. And not only much more merely because we trade at higher multiples than what you might pick up some of these circuits for in the cheap, but also because if those theaters were run by AMC, we believe they would do better. We have better marketing strategies. We have better purchasing power. And I think our ability to deliver the numbers bottom line beat a lot of the smaller operators who are still around in what is still a quite fragmented industry. 40% of the industry is still coming from very small operators. So I think the M&A market is ripe for us to move if we have the resources to move. Today we don't have those resources, but I can tell you that we are paying a lot of attention to M&A activity. We're still analyzing a lot of potential combinations, small ones, not necessarily big ones. It appears to us there is opportunity out there for us at hand when it's the right time for us to move intelligently, and that is as we can do it without compromising either our cash reserves or our absolute commitment to strengthening the balance sheet.
Final question here regarding the loyalty programs. We provided a lot of additional benefits to our loyalty members recently. And so people are just asking for an update about that. How's that going with things like Discount Wednesdays?
So we did just add a significant benefit by adding Discount Wednesdays to the mix of Discount Tuesdays. Remember, one of our tiers of AMC Stubs is AMC Stubs A-List. Back in May, we enhanced the benefits of A-List. A-List was quite successful for us before. You used to be able to see 3 movies a week. Now you can see 4 movies a week. We made it much easier to use the A-List program because you no longer need to fish for state ID, a driver's license. To get in, you're using your A-List. You just have to flash your phone because we added a picture ID to your profile within our A-List, within the app, within the AMC app for A-List. So that's all good. We did add a lot of benefit, but the results are just great. A-List started out right after COVID when we reopened theaters in 2020, having only about 500,000 members. It's up to close to 1 million, so that's doubled over the last 5 years. We also introduced a new tier of Stubs, our loyalty program, on January 1 called Premier Go, which gives people double the points generosity that a so-called insider, a member of our free tier, gets, and gives them other benefits. It's a path to getting from insider to Premier. Premier, you got there by paying $15 a year, now $18 a year, speaking of price increases. Now $18 a year. I guess my marketing department would insist I say it's $17.99, so it's not quite 18, right? In the consumer's head, we only raise it by $2, not $3. But with Premier Go, you get this increased generosity level. It's not all the way to the generosity level of Premier because Premier is a 5 times level of discount. But you earn Premier Go not by paying us a $17.99 purchase price, but you earn it basically by making 8 visits a year to our movie theaters, which isn't that hard to do. But But here's the number. We didn't have one single member in our Premier Go tier on December 31 of 2024. Sitting here today, we have between 600,000 and 700,000 of them. And by definition, they're seeing 8 movies or more a year. Like, this is really good for us. So our knowledge of loyalty programs continues to be enormous. We continue to reap great benefit from it. And we're doing this not only in the United States. In 2025, we launched a points-based loyalty program in the United Kingdom. The UK has always had, not always, but it's for a long time has had, actually ever since we bought it in 2016, has had its Limitless program, which was a model for A-List. But we now have a loyalty scheme in the UK, just like we have stubs here in the US. And that loyalty program in the UK is also being spread to some of our other country territories across Europe. So this is an area where we know we're doing, and and it's one of the reasons why we're optimistic for our future. With that, I think, is that the last question for today? So I'd just like to close by telling you all, I don't know where you're going to be Friday night, but I'm going to be in an AMC theater watching Nuremberg. It's going to be a really great movie, I think, starring Russell Crowe. My goodness, the movies we have coming out over the next 8 weeks, it's a parade of one great title after another. I think I can say with some degree of confidence, America and the world is going to be in movie theaters in November and December. We hope we can count you among them. Thank you for listening to us today and joining. We'll talk to you again soon. All the best.
How did we go through a 1 hour call without the word popcorn being mentioned one time, Dan? Anya, you guys. We had a drinking game all set up. Popcorn was the buzzword, the shot call. He didn't say popcorn unless I missed it a single time. Taylor Swift was our runner-up, and Strengthen the Balance Sheet was a runner-up of what we didn't vote on those. You guys didn't vote on those, and he said those a bunch. I'd be on the floor if those were the shot call words of the day. I'm kind of glad that it was popcorn because I'm trying not to drink this year. That earnings. So what do we say about that earnings? What do we say? I'm trying to pull up for those of you who just want the recap. Total revenues came in a little bit higher than I was expecting, which is good. Net loss, as I have been talking to you guys since the beginning of October, was likely to be higher than you were being told. I tried to tell you to expect some other expense right here due to the debt restructuring. Format, let's color that hot pink. I had just estimated it at 100 million. It was way higher than 100 million. And, it is what it is. They had to do the debt restructuring. These are one-time non-cash expenses. And so that just completely tanked the net loss. But when you adjust out those non-cash impairment charges, the net loss was only 110 million. And I had forecast that without those, that it was going to be around 105 million. So, it's in the ballpark of what I was expecting. 105 million versus 110. And I also told you that the interest expense was going to go up. I had forecast 118. It came in at 119. Last quarter, it was 109. I know people have been telling you on YouTube interest is going down. No, it's not. The rates keep going up. We got to get better, understanding who is actually able to use math and read company filings and communicate this stuff to you guys. There's a lot of bad information out there still. It's very irritating to me, which is why I'm still here talking to you guys, even though I know it's not popular. to be the guy giving you the facts, but I don't own the stock. But as long as I keep seeing people put out pumping misinformation, inability to read filings or use a calculator, I'm still going to be here. One day, when the smoke is cleared, I will probably come in and buy the stock, but I do not own the stock ahead of this vote coming up. December, what is it, 9th or something? We'll see. We'll see what happens after that. Hopefully, a few of you, even though, you know, I'm not a shareholder, you appreciate someone giving you no emotion, no bias, just the best financial look at the filings and the spreadsheet that we can do without overselling it or without being bearish. I'm looking for an opportunity to not lose money and to make money. And that timing is going to require unemotional analysis. So just doing the best I can. Free cash flow this quarter was negative 81 million. I think it will be positive next quarter. Q4, I think, will be positive free cash flow. And I'm waiting to see, is Adam Aaron going to be right that the last three, what did he say, the last 3 quarters will be positive free cash flow? I don't know about that. We'll see. I'm going to start working on my Q4 forecast. Actually, I'm going to try and do a next 5-quarter free cash flow forecast. Now that we got Q3 in the bank, in the bag, now that we know that the company ended the quarter with 365 million in cash, whatever they said, we kind of know where we're at. And yeah, here it is, 365 million. So we can start working on some forecasting, because we really want to know what's free cash flow and what's the cash position going to look like for the next 5 quarters, considering the box office that we know about now. That will help us decide dilution risk. I know the bears I've seen them in the chat. They're telling you, you're going to get 500 million shares dumped on you in January. I don't think so. I don't think you're going to have, if the vote passes and the share count increases, I don't think they're going to dump 500 million shares on you right away. Over time, they will. Yes, over time, they will. If not for liquidity, then to do debt for equity swaps. Got to fix the balance sheet. So that's what's up. And I think you need to be really smart about your timing and go see some movies. That's what I'm doing. We're A-list members. We're going to continue watching movies, even if we don't own shares. And we'll see if the freaking movie studios can put out some good movies next year. That is how AMC gets saved. More movies, better movies. And your guys' support watching the films and buying concessions. What's a calculator? The Spiz says. He said, oh yeah, Dink, thank you for reminding me. He did not say positive free cash flow. He said positive cash flow. He's really good at wording it where we don't quite know. Oh, I didn't say free cash flow. I said cash flow. Yes, even more so. They probably will be positive operating cash flow, right? We have multiple cash flows we could measure. He didn't specify which one. I just fell in the trap. I fell in the trap of making an assumption instead of remembering, and we've talked about this before, Dink. We got to remember when they use very gray language, often it is for us to create our own answer. We create this story in our mind. He promised it's going to be positive free. No, he didn't. He said positive cash flow. Which version of cash flow are you talking about? I fell in the damn trap myself, and I know we've had this conversation before, not to fall in that trap. Anyhow, I look at free cash flow, and I'm going to provide you guys some videos with next 5 quarters free cash flow estimate. That's how AMC survives or not, besides box office. We are going to go see Predator Badlands. have it forecast for about a full Q4, maybe 50 million. Opening weekend, probably be a little bit less than that. In Nuremberg, Aaron kept on talking about Nuremberg. I have seen no buzz whatsoever, even though it's Russell Crowe on Nuremberg. Am I just missing this? I have it forecast for about 10 million bucks. They must be paying him a little bit extra to promote it, because I don't see that being a big box office movie, Nuremberg. Although it definitely is a movie I will go see. Mr. Stewart says he said AMC is out of stocks, good or bad. It's horrible. You don't want to be a company in a money-losing scenario, a cash burn scenario of free cash flow. You don't want to be in a negative free cash flow scenario and have no way to raise money. That only ends one way, and it's not going to be good for common stockholders if they don't have access to cash. I'm not telling you how to vote. I'm just saying, if they're burning money and they don't have access to cash, it's not going to end well. I'm not saying that diluting is something you should be excited about either, but if you are determined to hold, you can vote for more dilution or you can vote for bankruptcy, as far as I'm concerned. That's how I'm kind of looking at it. And then pray that the box office is better and cash flow gets better and share price gets better, and pray that AMC is patient and judicious about how they utilize those shares. A lot of prayer involved. I don't have any magic answers for you. There's no great super scenario. Roaring Kitty coming back, I'd take that. That'd be a super scenario. Somebody come back and get us excited again. Get these shorts, let's knock them back on their heels. But yeah, box office is that is the only path to success here. Revenue. I don't see enough people talking about this stock that are talking about going to movies. They'll talk to you about this. They'll talk to you about the shorts, the dark pools, Ken Griffin. Where are your fucking movie receipts? Like, am I the only one that goes to see 2 or 3 movies a week around here? Where's everybody else? Why? I don't even own the damn stock. Why am I doing all the work? You can bitch about dark pools and off exchange percentage all you want. If you're not going to the damn movies, forget about it. Far too many people talking about things that don't matter, in my opinion. User says if they don't get the vote, they will file for Chapter 11. Yeah, I'm going to post one more time for those of you that weren't here in the beginning. Here's my little grok summary of what happened with MMAT when they voted no. I want you to read that link. And again, I don't own the stock. I don't care how you vote. I am going to make 2 very firm predictions of what happens depending on how that vote goes. It's a vote for dilution, or it is a vote for bankruptcy. So choose wisely, friends, if you're deciding to vote and hold. The link I put in is what happened to MMAT after they voted no. This is facts. There was a big campaign to let's screw the shorts. Don't vote yes, vote no. Don't let them dilute us. Don't let the company give shares to shorts. I mean, just ridiculous stories. Same thing you're going to hear about AMC. Already hearing it. Don't let them give shares to the shorts. The shares are going to go to the bondholders. Let's see who the shares are going to go to. Shares are going to go to the bondholders to pay off debt. James says, what about Citi, Goldman Sachs, Barclays, B. Riley owning so many shares at $6? I don't know. Who says they own shares at $6? They don't disclose what price they bought at, James. They're buying, selling, hedging. Fintel, if you're looking at an average price on Fintel, that's a made-up number, first of all. Second of all, they're always buying and selling and hedging. They have calls, puts, shorts. They are not going to lose money on this trade. I'll tell you that right now. You guys want to say no one's selling. These fuckers are selling. The price is going down. Pay attention. And again, if you're looking at Fintel, where it says average price of any institution, that is a made-up number. Fintel basically takes the beginning price of the quarter and the end price of the quarter, and they create an average, and that's why every institution will have the same price. How did they all buy at $6? Do you think that's... No. I've talked to Fintel about it. It's a made-up number. It's not even on the damn form. What is your average price? It's not on the form. So much misinformation out here in this community still after 4 or 5 years. People believing data means something when it doesn't mean jack shit. All right, ladies and gentlemen, we'll do a wrap up on this call. And Marcus Corp, IMAX, and Cinemark in the next day or so, after I've had time to kind of think about it. And I encourage you to send me your questions on Twitter or in the comments of this video. What do you have questions about? What do you want to know in the wrap up? And I will do a judgment day on my forecast that I published back on October 2nd. Versus the actual results. Or this right here. It was worse. I had forecast in 100 million of July debt cost, and it came in 80 million more even than my most pessimistic guess. Should have put in 180, but anyways, you can go back and watch that video from October 2nd. We talked through it. If you listened, you were prepared. I know a lot of people, they didn't want to make a Q3 prediction video because you can always tell they know when it's going to be bad. Oh, sorry guys, I got busy, couldn't make a video. Anyhow. I know it's not fun being in this seat, having to tell you guys bad news, but I'd rather you have real news than no news. We will see you on the wrap up in the next day or so. Love ya. Be good.
Down by the dip, gotta hold our ground. We've been waiting for so long. Hedges rain will soon be gone. A green candle up, a red candle down. By the dip, gotta hold